Welcome back, everybody, to the Deep Dive. Today, we're going to be doing a deep dive into the world of mergers and acquisitions.
M&A.
You got it. We're going to be taking a close look at the 2025 M&A Outlook report from Goldman Sachs and trying to figure out, what's in store for the year ahead.
Yeah, it's always a fascinating landscape and never predictable.
Absolutely. I mean, one of the things that really jumped out at me from this report is this idea that companies are shifting from a defensive to an offensive strategy when it comes to M&A. It seems like they're not just hunkering down and waiting for the storm to pass.
Yeah, that's a great observation. We are seeing a pretty clear shift in sentiment, moving away from that kind of cautious wait-and-see approach that dominated the past couple of years and really embracing a more growth-oriented mindset.
So it's less about battening down the hatches and more about setting sail for new horizons.
Exactly. Companies are spotting clearer skies after a pretty turbulent period. They're seeing signs of stability in monetary policy regulations, and even geopolitical tensions are easing a bit. So CEOs are feeling more confident about making those big strategic moves.
They're not just trimming the sails anymore, they're building bigger ships.
Precisely. And the numbers back it up. Global M&A volumes actually rose 15% year over year in 2024, which is pretty respectable. But what's even more interesting is that nearly half the companies surveyed by Goldman Sachs say that their main goal for M&A in 2025 is strategic growth, adding new capabilities, a real departure from the consolidation and cost-cutting we saw before.
It's less about survival and more about thriving.
Yeah, exactly. It's about investing for the future and positioning themselves for long-term success.
Now, speaking of success, the report also highlights this interesting trend of sophisticated simplification, which sounds a bit like a contradiction. Can you unpack that for us?
Yeah, it does sound a bit paradoxical. But it basically boils down to strategic streamlining. Companies are realizing that they need to be more focused, more agile, and more efficient to compete in today's rapidly evolving business environment. So they're shedding non-core assets, getting rid of distractions, and really doubling down on their core strengths.
It's like decluttering on a corporate scale, Marie Kondoing their businesses.
Exactly. And what's interesting is this streamlining is happening on a global level. Over half of the separation announcements in 2024 were outside the United States.
Wow. So it's not just a U.S. phenomenon, it's a global trend.
Exactly. Companies all over the world are grappling with complex portfolios, trying to optimize their resources and responding to geopolitical tensions, as well as the shifting energy landscape. It's like they're rearranging the pieces on a global chessboard, trying to gain a strategic advantage.
It makes sense. I mean, why hold on to something that's not contributing to your overall goals?
Right. It's about focusing on what you do best and letting go of the rest.
Now, while corporations are streamlining and refocusing, what about financial sponsors? How are they navigating this evolving M&A landscape?
Well, they're facing a bit of a dilemma. On the one hand, they're sitting on mountains of dry powder, available capital, and there's pressure to deliver returns to their investors. But on the other hand, finding the right investment opportunities in this dynamic market can be tricky.
So it's a good problem to have, but still a problem.
Exactly. They need to find the right targets at the right price, and that's becoming increasingly challenging in today's competitive market.
I can imagine. So what strategies are they using to deploy that capital and generate those returns?
Well, we're seeing a lot of creativity. Sponsor-to-sponsor deals are becoming more common, where one private equity firm sells a company to another. We're also seeing more minority stake sales, where a financial sponsor sells a portion of its stake in a company to another investor. And then there are these innovative continuation fund structures, where a sponsor essentially rolls over its investment in a company into a new fund. This allows them to hold on to their winners for longer and potentially generate even greater returns.
It sounds like they're having to think outside the box to find those winning deals.
Absolutely. The traditional playbook isn't always enough anymore. They need to be more flexible, more creative, and more willing to take risks.
Now we can't talk about M&A in 2025 without addressing the elephant in the room. Or maybe we should say the algorithm in the boardroom, artificial intelligence or AI.
Yeah, AI is definitely the buzzword of the moment. But it's also much more than that. It's a fundamental force that's reshaping the M&A landscape in profound ways.
So it's not just a passing fad, it's here to stay.
Absolutely. AI is transforming every stage of the M&A process, from target identification and due diligence to valuation and deal execution.
So it's like having a super-powered M&A advisor working for you 24/7.
You could say that. AI can analyze vast amounts of data, identify patterns and trends that humans might miss, and make predictions about future performance with remarkable accuracy.
Wow. It sounds almost too good to be true.
Well, like any tool, AI has its limitations. It's not a magic bullet. It can't replace human judgment or intuition entirely, but it can certainly augment those capabilities and provide valuable insights that can inform better decision-making.
So it's about using AI strategically to enhance human capabilities, not to replace them.
Exactly. It's about finding the right balance between human expertise and AI-powered insights.
Now, the report breaks down the AI landscape into three layers: infrastructure, platform, and application. Can you give us a quick overview of what those layers represent?
Sure. Imagine a pyramid. At the base, you have the infrastructure layer. This is where you find the hardware, the data centers, the networking equipment, all the physical infrastructure that makes AI possible.
So it's like the foundation of the AI house.
Exactly. Then you have the platform layer. This is where you find the software, the algorithms,
Yeah.
the tools that developers use to build AI applications.
It's like the framework that holds everything together.
Right. And finally, at the top, you have the application layer. This is where AI is actually being used to solve real-world problems, to create new products and services, and to transform industries.
So this is where the magic happens.
Exactly. This is where we see AI being used to develop self-driving cars, personalized medical care, optimize supply chains, and much, much more.
It's incredible to think about the potential impact AI will have on our lives in the years to come.
It's truly mind-boggling, and it's only just the beginning. We're still in the early innings of the AI revolution, so buckle up.
Now, while AI is definitely grabbing the headlines, the report also highlights a resurgence in cross-border M&A activity. It seems like despite all the talk about deglobalization, companies are still looking beyond their own borders for growth.
Yeah, it's interesting, isn't it? You'd think that with all the geopolitical tensions and trade wars, companies would be retreating to their home markets. But that's not what we're seeing.
Hmm.
Cross-border M&A actually saw a significant uptick in 2024.
Wow. So what's driving this trend?
Well, there are several factors at play. One is the simple fact that growth opportunities in many developed markets are becoming increasingly scarce. So companies are looking to emerging markets for new customers and new revenue streams.
They're going where the growth is.
Exactly. And another driver is the desire to acquire strategic assets or capabilities that may not be available in the domestic market. This could be anything from advanced technology to specialized expertise to valuable intellectual property.
So they're shopping for the best talent and resources no matter where they are in the world.
Exactly. And then there's the issue of scale. In many industries, size matters. And cross-border M&A allows companies to quickly gain scale and expand their global footprint.
It's like they're playing a global game of Monopoly, trying to acquire as many properties as possible.
Yeah, that's a good analogy. But of course, cross-border M&A also comes with its own unique set of challenges.
Oh, I can imagine. What are some of the hurdles companies face when trying to do deals across borders?
Well, for starters, there's the issue of legal and regulatory complexity. Every country has its own unique set of rules and regulations governing M&A activity, and navigating those differences can be a real headache.
Yeah, it sounds like you need a team of lawyers just to figure out the paperwork.
You're not wrong. And then there are the cultural differences.
Hmm.
Merging two companies from different countries with different corporate cultures can be like trying to mix oil and water. It takes a lot of careful planning and execution to make it work.
Yeah, that makes sense. You've got different communication styles, decision-making processes, management philosophies. It's a recipe for potential conflict if you're not careful.
Exactly. So cross-border M&A is not for the faint of heart. It requires a deep understanding of the target market, the local business environment, and the cultural nuances that can make or break a deal.
It's like trying to navigate a minefield. You need to be very careful where you step.
That's a good analogy. But for companies that can successfully navigate these challenges, cross-border M&A can be a powerful engine for growth and expansion.
Now, the report highlights a particularly interesting trend emerging in the Asia-Pacific region, or APAC, as it's often called.
APAC is a hotbed of activity right now.
Hmm.
It accounted for around 30% of global M&A transaction volume in 2024, and it's only expected to grow in the years to come.
Wow. So what's driving this surge in activity in the region? Is it just cheap labor and manufacturing?
It's much more than that. APAC is home to some of the world's fastest growing economies, a burgeoning middle class, and a rising tide of technological innovation. Companies are flocking to the region to tap into these growth opportunities and to acquire strategic assets and capabilities.
It's like the Wild West of the M&A world.
Yeah. There's definitely a sense of excitement and opportunity in the air.
Now, within APAC, specific countries like Japan and India have been experiencing particularly strong growth in M&A activity. What's fueling this surge in these specific markets?
Well, Japan has long been a major player in the global economy, but in recent years it's been facing some challenges. A shrinking population, slow economic growth, and increased competition from China and other emerging markets. So Japanese companies are looking to M&A to revitalize their businesses, to acquire new technologies, and to expand into new markets.
So they're trying to reinvent themselves for the 21st century.
Exactly. And the government is playing a supportive role by implementing policies that encourage M&A activity.
But they're rolling out the red carpet for foreign investors.
You could say that. Now, India is a completely different story. It's one of the world's fastest growing economies with a young and dynamic population. It's a hotbed of entrepreneurial activity and technological innovation. And that's attracting foreign investors who are eager to be part of India's growth story.
It's like everyone wants a piece of the Indian pie.
Uh-huh. That's a good way to put it. And the Indian government has also been very proactive in creating a more welcoming environment for foreign investment. They've simplified regulations, improved infrastructure, and made it easier to do business in India.
So India is becoming a more attractive destination for M&A.
Absolutely. And as the country continues to develop and its economy matures, we can expect to see even more M&A activity in the years to come.
Now, before we wrap up this part of our deep dive, I want to touch on another key theme highlighted in the report, the rise of activism. It seems like activist investors are no longer just passive bystanders. They're becoming increasingly influential in the M&A world.
You're right. Activist investors are definitely making their presence felt. They're taking larger stakes in companies, they're launching more aggressive campaigns, and they're not afraid to shake things up.
So they're like the corporate equivalent of a honey badger. They don't back down from a fight.
Uh-huh. It's a good analogy. And they're having a real impact. They're pushing for companies to sell themselves, to divest non-core assets, to change their management teams, and to improve their financial performance.
So they're holding companies accountable and demanding better results for shareholders.
Exactly. And while some companies view activists as a nuisance, others see them as valuable partners who can help them unlock value and improve their operations.
It's like a love-hate relationship.
You could say that. But one thing's for sure. Activism is a force that companies can no longer ignore. It's a part of the M&A landscape, and it's here to stay.
So companies need to be prepared to engage with activists and to respond to their demands in a constructive way.
Absolutely. Ignoring them is not an option.
Well, this has been a fascinating overview of the key trends shaping the M&A landscape in 2025. It's clear that we're in for an exciting ride. What are some of the key takeaways you'd like our listeners to remember from this discussion?
Well, I think the biggest takeaway is that the M&A market is more dynamic and complex than ever before. There are so many factors at play. Technological advancements, geopolitical shifts, economic uncertainty, and the rise of new players like activists and SPACs.
It's like a giant puzzle with all these interconnected pieces.
Exactly. And to be successful in this environment, companies need to be adaptable, strategic, and willing to embrace change.
They need to be able to think on their feet and to make quick decisions.
Absolutely. And they also need to have a deep understanding of the forces that are shaping the market and the trends that are driving M&A activity.
So knowledge is power.
You got it. The more you know about the M&A landscape, the better equipped you'll be to navigate its complexities and to capitalize on its opportunities.
Well said. This has been an incredibly insightful conversation. Thank you for sharing your expertise with us.
It's been my pleasure.
And to our listeners, we hope you've enjoyed this deep dive into the world of M&A. We'll be back soon with more insights from the 2025 M&A Outlook report, so stay tuned.
Sounds good. Looking forward to it. So, we've talked a lot about these big picture trends.
Right, like the rise of AI and the shift towards growth-focused M&A.
Exactly. But I think it's always helpful to see how these trends actually play out in the real world.
Yeah.
To look at some specific deals that really illustrate these forces at work.
Absolutely. Let's zoom in on a couple of those notable transactions we touched on earlier, the ones that really showcase the growing influence of AI on M&A. What were those again?
Well, the Salesforce and IBM deals were particularly interesting, I think.
Yes, those were big ones. Let's start with Salesforce and their acquisition of Own. What was the strategy behind that move? It seemed like a pretty savvy acquisition.
Well, Oundle specializes in data protection and insight generation. And in a world where data is the new oil, those capabilities are becoming increasingly valuable.
So it's not just about having data, it's about protecting it and extracting insights from it.
Precisely. And with AI becoming more sophisticated and data hungry, those capabilities are only going to become more essential.
So Salesforce is basically shoring up its defenses and making sure it has the right tools to compete in the AI-driven world.
Exactly. They're building a moat around their data and their AI capabilities.
Smart move. Now, what about IBM's acquisition of HashiCorp? That was another big one.
Right. That deal highlights how companies are realizing that they need a rock-solid infrastructure to support their AI ambitions. It's not just about the algorithms, it's about having the right foundation in place.
So it's like building a skyscraper. You need a strong foundation to support all those floors.
That's a great analogy. HashiCorp is a leader in cloud infrastructure automation, and by acquiring them, IBM is gaining the ability to help companies seamlessly deploy and manage their AI workloads in the cloud.
It's like they're providing the plumbing and wiring for the AI-powered future.
Exactly. And these deals are just the tip of the iceberg. We're going to see a lot more M&A activity in areas like data management, cloud infrastructure, cybersecurity, all the things that are essential for enabling AI to flourish.
It's like a whole ecosystem is developing around AI with all these different players vying for a piece of the pie.
You got it. It's going to be fascinating to watch how this ecosystem evolves in the years to come.
Now, speaking of ecosystems, one of the things that really struck me from the report was the emphasis on cross-border M&A activity. It seems like despite all the talk about deglobalization, companies are still very much focused on expanding their global reach.
Yeah, it's a bit of a paradox, isn't it? You'd think that with all the trade wars and geopolitical tensions, companies would be retrenching and focusing on their home markets. But that's not what we're seeing at all. Cross-border M&A is actually on the rise.
So what's driving this trend?
Well, for starters, there's the simple fact that growth opportunities in many developed markets are becoming increasingly scarce. So companies are looking to emerging markets for new customers and new revenue streams.
They're going where the growth is.
Exactly. And another driver is the desire to acquire strategic assets or capabilities that may not be available in the domestic market. This could be anything from cutting-edge technology to specialized expertise to valuable intellectual property.
So they're shopping for the best and brightest no matter where they are in the world.
Precisely. And then there's the issue of scale. In many industries, size matters. And cross-border M&A allows companies to rapidly expand their global footprint and achieve the scale they need to compete effectively.
It's like they're playing a global game of Risk, trying to conquer as much territory as possible.
Yeah, that's a good analogy. But of course, cross-border M&A also comes with its own unique set of challenges.
I can imagine. What are some of the hurdles companies face when trying to do deals across borders?
Well, for starters, there's the issue of legal and regulatory complexity. Every country has its own unique set of rules and regulations governing M&A activity, and navigating those differences can be a real nightmare.
Yeah, it sounds like a logistical labyrinth.
You're not wrong. And then there are the cultural differences. Merging two companies from different countries with different corporate cultures can be like trying to fit a square peg in a round hole. It often requires a lot of patience, sensitivity, and creativity to make it work.
It's like those cooking shows where they challenge chefs to fuse two completely different cuisines together. Sometimes it works brilliantly, other times it's a complete disaster.
Exactly. So cross-border M&A is not for the faint of heart. It requires a deep understanding of the target market, the local business environment, and the cultural nuances that can make or break a deal.
It's like navigating a minefield. You need to be very careful where you step.
That's a good analogy. But for companies that can successfully navigate these challenges, cross-border M&A can be a powerful engine for growth and expansion.
Now, the report highlights a particularly interesting trend emerging in the Asia-Pacific region, or APAC, as it's often called. What's making this region such a hotbed for M&A activity?
APAC is a dynamic region. It's home to some of the world's fastest-growing economies, a burgeoning middle class, and a rising tide of technological innovation. And that's attracting a lot of attention from global investors and companies looking for growth opportunities.
It's like everyone wants a piece of the APAC action.
Exactly. And the numbers back it up. APAC accounted for around 30% of global M&A transaction volume in 2024, and it's only expected to grow in the years to come.
Wow, that's a significant chunk of the global M&A pie. So what are some of the key factors driving this surge in activity?
Well, one factor is simply the region's economic growth. Many APAC economies are growing at a much faster pace than their developed counterparts. So they're attractive destinations for companies looking to expand their reach and tap into new markets.
They're following the growth wherever it leads them.
Exactly. And another factor is the region's burgeoning middle class. As incomes rise and consumer spending increases, companies are eager to establish a presence in these markets and to offer products and services that cater to the needs of this growing consumer base.
So it's a combination of economic growth and a rising tide of consumers.
Precisely. And then there's the factor of innovation. APAC is a hotbed of technological innovation. Many countries in the region are investing heavily in R&D and are developing cutting-edge technologies in areas like artificial intelligence, biotechnology, and renewable energy.
So it's not just about cheap labor and manufacturing anymore. It's about innovation and high tech.
Exactly. APAC is becoming a global hub for innovation. And that's attracting a lot of interest from companies that are looking to acquire new technologies and to partner with innovative startups.
It sounds like APAC is the place to be for M&A activity these days.
It's definitely a region to watch. There's a lot of energy, a lot of dynamism, and a lot of opportunity.
Now, within APAC, specific countries like Japan and India have been experiencing particularly strong growth in M&A activity. What's fueling this surge in these specific markets?
Well, Japan's an interesting case. It's a mature economy with a long history of innovation, but it's also facing some headwinds.
Mm.
A shrinking population, slow economic growth, and increased competition from other Asian economies.
So Japanese companies are looking to M&A to revitalize their businesses and stay competitive.
Exactly. They're looking to acquire new technologies, to expand into new markets, and to simply become more efficient and productive. And the government is playing a supportive role by encouraging M&A activity and by making it easier for foreign companies to invest in Japan.
It's like they're hitting the reset button and trying to position themselves for the future.
That's a good way to put it.
Yeah.
Now, India is a completely different story. It's one of the world's fastest growing economies with a young, dynamic population and a rapidly expanding middle class. It's a hotbed of entrepreneurial activity and technological innovation.
So India is like the rising star of the global economy.
You could say that, and that's attracting a lot of interest from foreign investors who are eager to be part of India's growth story.
It's like everyone wants a piece of the Indian dream.
Haha, exactly. And the Indian government has also been very proactive in creating a more welcoming environment for foreign investment. They've simplified regulations, improved infrastructure, and made it easier to do business in India.
So India is becoming a more attractive destination for M&A.
Absolutely. And as the country continues to develop and its economy matures, we can expect to see even more M&A activity in the years to come.
It sounds like India is a market to watch very closely. Now, shifting gears a bit, let's talk about SPACs. They've been generating a lot of buzz in the M&A world lately. What are SPACs exactly, and how are they impacting the M&A landscape?
Well, SPAC stands for Special Purpose Acquisition Company, and it's basically a shell company that raises capital through an IPO with the specific purpose of acquiring a private company.
So it's like a blank check company that goes public and then goes shopping for a target.
Exactly. SPACs have become a popular alternative to traditional IPOs in recent years because they offer several advantages for both companies and investors.
What are some of those advantages?
Well, for companies, SPACs offer a faster and more certain path to going public. The SPAC already has a public listing, so the acquisition process is much quicker and less risky.
It's like taking an express lane to the stock market.
Yeah, exactly. And another advantage is that companies can often negotiate a higher valuation with the SPAC sponsors than they could achieve in a traditional IPO.
So it's a more favorable deal for the company going public.
In many cases, yes. Now, from an investor's perspective, SPACs offer the opportunity to invest in private companies that they might not otherwise have access to. It's like getting in on the ground floor of a hot new startup.
So it's a way to get exposure to high-growth companies before they become household names.
Exactly. And another advantage is that SPACs typically have a defined time frame within which they must complete an acquisition. So there's a sense of urgency and accountability built into the structure. And if the SPAC doesn't complete an acquisition within that time frame, investors get their money back.
Ah, so there's a bit of a safety net for investors.
Exactly. Now, it's important to note that SPACs have also come under scrutiny in recent years. There have been concerns about the lack of transparency in the SPAC process and about the potential for conflicts of interest between SPAC sponsors and investors.
So there's a need for greater regulation and oversight.
Indeed. And regulators have already started to take steps to address these concerns. So it's important for investors to do their due diligence before investing in a SPAC and to make sure they understand the risks involved.
It sounds like SPACs are a bit of a mixed bag. They offer some potential advantages, but they also come with some risks.
That's a fair assessment. As with any investment, it's important to do your research and understand the potential upside and downside before jumping in.
Well said. Now let's shift gears a bit and talk about another emerging trend that's shaping the M&A landscape, the metaverse.
Ah, yes, the metaverse. That immersive digital world where the lines between physical and digital reality blur. It's a concept that's capturing the imaginations of tech enthusiasts, investors, and futurists alike.
It's like stepping into a science fiction novel, a world where anything is possible.
Exactly. And while the metaverse is still in its early stages of development, it's already starting to make waves in the M&A world.
Really? How so?
Well, companies are starting to make strategic acquisitions to position themselves for a future where the metaverse becomes a mainstream reality. They're buying companies with expertise in areas like virtual reality, augmented reality, 3D modeling, blockchain technology, and gaming, all of which are considered essential building blocks of the metaverse.
So they're basically assembling the pieces they need to build their own virtual worlds.
Exactly. Can you give us some examples of specific M&A deals that have been driven by the metaverse?
Sure. One notable example is Microsoft's acquisition of Activision Blizzard, a leading video game developer.
Ah, yes, that was a big one.
Microsoft clearly sees the metaverse as a major growth opportunity, and they believe that Activision Blizzard's portfolio of popular games will give them a significant advantage in this space.
It's a smart move.
Yeah.
Video games are already creating immersive virtual worlds that people love to spend time in. So it's not a huge leap to imagine those worlds evolving into something even more immersive and interactive, something that we might call the metaverse.
It's like the metaverse is already here in some ways, just waiting to be fully realized.
Exactly. Another notable deal is Meta's acquisition of Whole Fitness within a virtual reality fitness company.
Oh yeah, that's interesting. So they're betting on fitness being a major use case for the metaverse.
Precisely. Meta believes that people will want to stay active and healthy in the metaverse just like they do in the real world. And Within's technology allows people to work out in virtual reality environments, which could be a lot more engaging and motivating than traditional exercise.
It's like turning your workout into a video game.
Exactly. And I think we're just scratching the surface of what's possible with the metaverse. It has the potential to revolutionize the way we work, the way we learn, the way we shop, the way we socialize. It's a whole new world waiting to be explored.
It's exciting and a little bit daunting at the same time, like
Yeah.
stepping into the unknown.
You got it. And it's going to be fascinating to see how this all plays out in the years to come. But one thing's for sure, the metaverse is going to be a major driver of M&A activity. Companies are going to be scrambling to acquire the technologies and the talent they need to compete in this new virtual frontier.
So it's a land grab in the digital world.
You could say that, and the stakes are high.
Hmm.
The companies that get it right could reap enormous rewards. The ones that fall behind could be left in the virtual dust.
So buckle up. It's going to be a wild ride.
You got it.
It seems like SPACs are a bit like a shortcut to the stock market. They offer some potential advantages, but they also come with some risks.
Yeah, that's a great way to put it. As with any investment, it's crucial to do your research, understand the potential risks and rewards before jumping in.
Well said. Now, as we wrap up this deep dive into the 2025 M&A outlook, I'm really struck by the sheer complexity and dynamism of this landscape. It's like we've been exploring a vibrant coral reef, teeming with life with all its intricate connections and ever-changing currents.
Yeah, it's a truly fascinating and ever-changing world, isn't it? We've uncovered so much today, from the rise of AI and the metaverse to the resurgence of cross-border deals and the growing influence of activism.
And the thing is, we've only just scratched the surface. The M&A landscape is constantly evolving, driven by this, intricate interplay of technological advancements, economic shifts, geopolitical tensions, and regulatory changes.
It's like trying to predict the weather patterns of a whole new planet.
Yeah.
There's so many variables at play.
Exactly. It can feel overwhelming at times, but it's also incredibly exciting to witness this transformation taking place and to see how companies are adapting and innovating to stay ahead of the curve.
Absolutely. For those who are willing to embrace change, to adapt to new realities, and to think strategically, the M&A landscape offers tremendous opportunities for growth, innovation, and value creation.
It's like being a pioneer, venturing into uncharted territory with all the risks and rewards that come with it.
That's a great way to put it. And as we navigate this complex and ever-changing terrain, one of the most important things to remember is that knowledge is power.
Couldn't agree more. By staying informed, by asking the right questions, and by seeking out expert advice, we can make more informed decisions and increase our chances of success in this arena.
And just as importantly, we need to stay curious.
Curiosity is the fuel that drives exploration and discovery, right?
Exactly. So let's keep our minds open, let's keep learning, and let's keep pushing the boundaries of what's possible in this world of M&A.
Well, on that inspiring note, we've reached the end of our deep dive into the 2025 M&A Outlook.
It's been a pleasure sharing these insights with you.
And to our listeners, thank you for joining us on this journey. We hope you've gained some valuable knowledge and perspectives that will help you navigate this fascinating world.
Remember, the M&A landscape is constantly evolving, so stay curious, stay informed, and stay ahead of the curve.
Until next time, happy exploring.